This is another episode of me documenting the day-to-day process that I'm taking to achieve long-term consistency in the financial market. And this is a weekly review because it is Saturday. So what do we do on the weekend? Actually, hold on. What is a weekend? Why would you want your week to end? Why would you want to end your momentum that you've built over the past 5 days? It doesn't make sense to me. So I don't have weekends. I keep going. This shit don't stop. It never stops. So the first thing that I do on a Saturday is I wake up at 6 o'clock in the morning. It takes me 15 minutes exactly to get ready, and then I hop on my computer and I do my weekly review. Matter of fact, the first thing that came to my mind when I woke up this morning was, yes, weekly review. I kid you not. That's the first thought that I had. You got to be excited about this shit. You got to be passionate about this shit. If you want to take trading seriously, and if you actually want to make it in this space, you got to fall in love with it. You got to fall in love with the game. You got to fall in love with the craft. You got to fall in love with the journey and the continuous evolution of you. So this week, if we look at the baseline statistics, net P&L $159.22, trade win percentage 28.57%, profit factor 1.34, day win 33.33, average win loss 3.35. Okay, cool. Those are my baseline stats. They're gonna be a good understanding of where I went wrong and where I went right. So right away you can see that if we toggle on our multiple, my R multiple is shit. And this is something that's been consistent throughout the entire week of September. So what is going on there? Well, I know that I'm not able to capitalize on my winning trades. That's been something that I'm struggling with recently. And that's what I struggled with this week. So that's going to be one of the highlights, one of the negative highlights from this week. My average win to loss ratio, it's still staying up there. I thought it was lower. If we toggle on R multiple, it's only a 2.49. So this is significantly dropping. And initially, my R multiple was extremely high. I've had weeks in the past where my R multiple was 4. Literally. That's actually what I used to average. It used to be an average R multiple of 4. Now that has dropped down to 2.49. So what is going on? I'm not able to capitalize on my winning trades. And it is because of the way that I've conditioned myself through backtesting, which we will get into. But for now, let's take a peek at the weekly review. So September 22nd, 2025 to September 26th, 2025, the first thing that I'm going to do is highlight my performance stats. And these are just notes that I made at the end of yesterday's session, which is true. And I'll explain, I'll get into this. But performance stats, just things that I'm highlighting, right? The baseline stats. And then I'm going to make note of what are the red flags from these stats, which would be the win to loss ratio and R multiple, which I explained to you guys. It's continuously to drop and it's dropping week over week. So this shows my inability to capitalize on my winning trades. My losses are increasingly getting bigger, which is not necessarily true. They're kind of getting bigger. I'm not really risking more at all. But my losses are frequent, which is true because the win rate, I have a 28% win rate, right? My wins aren't big enough to recover the drawdown. Losses are getting bigger and frequent. Wins are infrequent and not big enough, which is black and white. That's the problem that I'm dealing with. So I'm not able to capitalize on my winning trades. I'm not able to maximize them. Now, if I'm able to maximize on my winning trades, this system can be a whole lot more profitable. It's a high R multiple system, right? So I don't have to have a high win percentage. The win percentage is going to be low. Ideally, it's around 33%. In this case, I'm a little bit below that, 28.57. But the win to loss ratio should be above 3 easily. Should be above 3.5 easily. So the positives, my win percentage is still staying the same, not necessarily a good thing or a bad thing, but it's within the ballpark of what keeps my system profitable. So next from that, the next thing that I cover is market approach, because this is something that I struggled with really bad in the month of July and June. So a couple of months ago, this was the number one constraint for me because I didn't have a process at arriving at a bias or at arriving at a trade plan. So it took me a while and a lot of hours of backtesting to come to an understanding of, okay, this is exactly what I'm looking for when I come to the market. And it's the same thing day in, day out. And I use the same principles. I read the same characteristics in price to arrive at, okay, this is what the market's probably going to do. And it took me a really long time and a lot of work to arrive at this. I'll just show you a little bit of the work that it took me to arrive at this. If I go to the optimal intraday swing model, which is what I've dubbed my model, which I'm not really sure if I want to make it a swing model anymore because I'm doing a lot of give back trying to make it a swing model, which we'll get into. So I've done the work of outlining pretty much everything that I need to know for all 8 of the playbooks that I have, and they all follow the same characteristics and the same principles. It's just slight different variations in the way price presents itself. So I have 8 playbooks, and I've done the work to understand them on a deep level. So now that I'm getting more comfortable with my playbooks, my ability to frame a market approach and know exactly what I'm looking for going into that session is only getting better over time. I've went back and I've back tested 80 days, 80 presentations of my playbooks playing out. And doing this work over the past 2 weeks, this is what I've been working on for the past 2 weeks. Hasn't even been 2 weeks now, but I knocked this shit out like this because I am operating with efficiency and I'm operating on a schedule with a plan, with a strategy, and I know exactly what I'm working on. So I knocked this out, and immediately I'm seeing a positive impact on my ability to frame a market approach. If I go to the strengths versus weaknesses, I have gotten significantly better at timing reversals as a result of a more confident market approach and a deeper understanding of my playbooks. If I go to the overview and I look at how did I grow this week, the work works. The work works, folks. Seriously. If you want to get better, you have to put in the work. For every action, there's an equal and opposite reaction. If you put in the work, you're going to get something out of it by law. That's how it works. It's how the world works. I'm seeing results from the backtesting I've done, unlocking a new understanding of my playbooks, a new way of doing higher time frame analysis, resulting in an exceptional ability to frame and execute on my trade plans. I now know how to frame each trade idea for that particular playbook, what time that move is likely to come, and what draw on liquidity I should be aiming for. So going back to the market approach, I only got the bias wrong 1 out of 4 days this week, and that was on Tuesday. And if y'all know what happened on Tuesday, we literally just had a large down day, which kind of came out of nowhere, if I'm being honest. For me, at least, it came out of nowhere. I was not expecting it. And it overlapped the entire up day that we had on Monday. Monday, we had a really strong up day. I did not trade because it's Monday with no driver. Tuesday completely overlapped that. Now, I know probably 50% of us were not looking for a move like that. Maybe some of y'all caught it. I didn't. I wasn't looking for it. I was looking to be a buyer that day because it made sense. The market's at all-time highs. We just had a large up day. I wasn't expecting that. Now, aside from that, I got 3 out of 4 days correct. And this is huge because last week, if we look at last week's approach, 4 out of 4 days correct. Oh, shit. I mean, here I have them marked as incorrect. But I meant 4 out of 4 correct, okay? So if I just toggle back to, let's say, July, let's look at how this looks like here. So bias accuracy, correct 3 out of 5 days, incorrect 2 out of 5 days. We can just scroll here. Correct 1 out of 3 days, indecisive 2 out of 3 days. So I had a really hard time with market approach. 3 out of 5 days incorrect, 1 out of 5 indecisive. Only 1 correct on this week. None correct on this week. So you can see how I've literally turned that statistic around. It's flipped. Now, for the most part, I'm getting bias correct each and every single trading day. Probably with a 50% likelihood, I'll say that I'll get the bias correct and I'll frame the real move of the day. Now, my ability to execute that on that is also improving because of the work that I've done. The work works. Seriously, if you want to get better at trading, you have to do the work to accumulate experience because all it is experience. My experience tells me what is likely to happen. That's it. How am I able to get experience? How do you cultivate more experience? Back testing, more reps, more hours, more screen time, more experience. Backtesting is the tool that allows you to do that. Understand your model, understand your market approach, understand the market on a deep level simply by getting more reps and more experience in. That's it. That's all it takes. So, although I framed the market approach correct 3 out of 4 trading days, why am I only walking away up $159? Why was I not able to capitalize on Wednesday? Why was I was able to capitalize on Thursday, not as much as I should have, and I was not able to capitalize on Friday. So I was only able to capitalize on one of those days where I had the correct market approach. In fact, one of those 3 days, it was actually a red day. So how does this happen? This is extremely frustrating, right? You come to the market, you get the bias correct, but you leave unprofitable. You leave in drawdown. How does that happen? Well, Wednesday, we'll just get into the daily breakdown. The issue with Wednesday, let's just click on one of these trades so I can easily access the daily journal from here. Okay, so I'm bearish. I'm watching for potential break at 9:30. I'm watching for a break at 9:30 if price rejects the 4 hour, 1 hour, 15-minute SIBI. Did it do this? Let's go in hindsight and look. Did it break right at 9:30? Oh, here's 9:30. Looks like it broke lower right at 9:30. Now the issue is my inability to get on side with the moves that I'm looking for. Now you look at first presentation, and obviously that was the ideal sell for the day. This is what I do at the end of every trading session. I go back and I frame what was the ideal move for that session. We can see that I was clearly first presentation. Now I actually executed this, and I actually had this trade, right? If I go to the first trade that I took that day, and if we pull up the chart with my executions on it, we go to a 1 minute, I can full screen this real quick. Let me apply my layout so we can actually see. That's disgusting. Okay. We can see that there's first presentation, right? And I actually ended up selling the reaction off of first presentation. Now, why did I take off early? Why did I take off early? Because look what happened. The market actually ended up dumping. Jeez. 200 handles in my favor had I held on to this short position. So why did I let go of it? Why did I let go of this trade? Well, it is because of how I felt in that trade. So instead of just selling that gap, I had to react to the reaction off of it, which led to an impulsive short, and I was not comfortable with holding because of the skewed risk. If I pull up the recording from this session, which was when? On the 24th? Let's pull up the 24th. Let's go to the first execution, which is here, okay? Boom, okay, I'm getting tagged in. Now, instead of just confidently selling first presentation, I can easily frame the risk on this trade because where's my stop loss going to go? Well, if I'm anticipating this gap to stay open, it can go right here above the high of it. But ideally, your stop loss is going to go above the high of the fair value gap, right? Now, if I'm selling all the way short down here, where's my stop loss going to be? Above the high of the fair value gap? How many points is that? How many points is that if I sell down here, my stop is at the high of the fair value gap? That's 24 handles, okay? That's not how much I'm used to tolerating. That's above my risk tolerance. That's above my natural, normal risk tolerance. So looking at this and looking at, oh shit, I just jumped in all the way down here. My stop has to go up here. Now I'm thinking, okay, I just impulsively jumped in. And because I impulsively jumped in, I skewed the risk. And now I'm uncomfortable in holding this short position. So I know what I did. I know what I did wrong. And I just pulled the trade off before I thought it would be a losing trade. So kind of lacking confidence in the idea, kind of scared from how much open risk there was on the position because I chased it. Why not just sell first presentation though? Why not just sell that gap? And this is the big issue that I have, which is one of the main constraints in my trading right now. If we go to the weekly review, create a separate tab for that. What the heck did I just do? There we go. So go to notebook. If we look at how did I hold myself back this week, keeping risk as minimal as possible. This is not, I should have added this issue as well. Inability to get on side with the move, but mistakes. Trying to keep my inability to get on side with moves by confidently executing the PD array. I know price should respect and not knowing where to frame a way to get on side. So this is basically what I did right here. Why not just execute first presentation? If I just do that, I can confidently frame the risk. I can sit in this trade comfortably and I can ride this thing down like I anticipated it to do in my pre-market plan. Now, because I'm missing the sell right here, I'm missing the optimal sell, right? Now I've missed the move. Now I'm trying to find a way to get on side. Now I'm trying to find a way to get on side with the move. And I don't know how. This showed one of my other weaknesses that I have in my trading, in my ability to execute moves. So I'm trying to find a way to get on side with this move. I know that we're likely going to deliver these lows down here, right? So what do I use to frame a way to get on side? Well, I look at this 5-minute gap. I frame it. Okay. I drop to the lower time frame. And again, instead of just confidently selling the 5-minute SIBI, what do? I react to a reaction off of that gap. So I'm waiting for the change in the state delivery, and I get it here. I notice how this candle trades up to the midpoint, but it closed below it. Rejected it right there. And then as soon as we cross the open price of this up close candle, I view that as a change in the state delivery, and I sell the market there with confidence because I'm thinking this is a change in the state delivery. We're just going to go lower and do this. Now the move actually happened at the 15-minute SIBI. It did not happen at the 5-minute SIBI. This is another strong weakness of mine. I have the inability to frame a way of getting on side with moves, and I'm just not confident in executing the PD array that I know the market should reject and just taking that. Instead, I'm reacting to the reaction off of it. So 2 ways that I'm really struggling to get on side with moves. Number 1, not confident in executing the PD array that I know price should reject and reacting to the reaction off of it. And number 2, I just simply don't know where to frame a way to get onside, how to time these reversals when I miss the initial reversal or the optimal entry. So in this case, I missed the optimal entry. What does that lead to? Now I'm looking for a way to get onside, and that leads to me framing a trade here, which is not where the reversal happens. It's the wrong timing, wrong location. It happens at the 15-minute civvy, and then it breaks lower. So there's an issue there. There's Wednesday for you. Now Thursday, a good session. What does a good session always start with? It starts with confidence in my market approach. So if we go to the daily journal, we can just toggle right here, the optimal market approach. I am confident in my read. Confidence in my, well, I'm noting the confidence in my read, but read this. I am confident this should go lower. I am not looking to be a buyer at all today. That's it. I am not looking to be a buyer at all today. I'm pretty sure I highlighted this. Where'd my highlights go? Okay, no, I didn't. But this would be something good. So if I find something good for my daily reviews or my daily process, I'm gonna highlight that in green and make note of that. So there we go. I'm not looking to be a buyer at all today. What does that mean? This session is one-sided. Your best sessions are gonna be one-sided. It's gonna be where you come to the market and you look at it and you're thinking, this is going lower. I have no way of framing this going higher. That's it. Which means you are 100% confident in the idea of selling the market, which means you're going to be really able to execute on that intraday. You're not going to feel any kind of hesitation. You're not going to feel any kind of doubt about the idea. You are confident that this thing is going lower today. So the days where you are confident in one side of the market and you can't frame it any other way, those are going to be your best trading days. This was one of those days on Thursday, and I was able to capitalize on that, but not as much as I should have because I'm giving back. So let me explain how I've been conditioning myself to trade with this model. Okay. First of all, let's just look at the stats. Okay. Here's one thing that I'm doing. You can see that I'm annotating or noting the full risk to reward ratio, the best possible entry with the smallest amount of risk with the best possible outcome, the best possible reward, the highest reward, the best exit. Okay. So because I have back tested the best possible outcome in terms of entry, stop loss, and exit, and I'm noting the full risk to reward ratio, the best possible risk reward ratio on these setups, this has conditioned myself to look for perfection or demand perfection from the market and demand that it give me exactly what I'm looking for. So now I'm going into every single trade trying to frame the least amount of risk possible, trying to get the best entry possible, and trying to aim for the full swing, trying to walk down that entire price swing, get the entire move, and squeeze as much out as I possibly can. So because I'm going into the market demanding perfection from it, I'm creating the opposite outcome, which is kind of funny how this works, right? Because if you demand perfection, you're asking for frustration. You're demanding that you get the whole pie. You're asking for the whole damn thing. Instead of just going in there and taking your piece, being content with that, being done, walking away. And this is why I'm not able to capitalize on my winning trades. So if we toggle the weekly review, it's clear to me the way I've been backtesting has conditioned myself to not know where to frame a stop loss or take profit because I'm looking at the best possible outcome every single time. This is leading to premature stop outs and leaving a lot of money on the table. By demanding perfection, by perfection I mean the smallest risk possible and the largest reward possible, I've created the opposite outcome I desire. I've conditioned myself to do so. Now I have to reverse this conditioning and build a trade management model. So right now I'm at a point where I can frame trade ideas confidently. I can confidently frame a market approach. Now I'm lacking in my execution on those ideas in terms of stop management and where am I even taking profit, which is leading to a lot of give back on these winning trades. Because for example, in Thursday's trade, I should have profited $600 in this trade, but I left $200 on the table because I'm trying to hold for the end of the day, because I've conditioned myself with the way that I backtest to hold for the end of the day basically and try to get as much as I possibly can out of that move instead of just taking my piece of the pie, getting in, getting out, being done, moving on. So had I been doing this over the course of this month, the outcome would be a lot different. But obviously I have to learn this lesson in order to make the adjustment. Not everything is going to be perfect right from the get-go and I'm just going to do everything right? That's the part of the journey. You're going to hit roadblocks. You're going to face adversaries, but you have to get over them. You have to identify them, understand them on a deep level, and get over them. So that's kind of the phase that I'm going into right now. It's problem identification, problem understanding, and problem solution. So now I'm building a problem solving model right now because I have this problem where I'm just constantly giving back in my winning trades and I'm not able to capitalize on them, which is holding me back a lot. So I've done a lot of work of back testing, but I haven't done a lot of work of identifying the problems that I have in my own personal trading. And now they have accumulated to a point where I can no longer ignore them because I continue to make the same mistakes over and over and over again over the course of this entire month. So now I have to intentionally go back, follow the problem solving model, and fix these things and get over these roadblocks and these adversaries, which I can. You can. No problem big enough, no mountain high enough. I'm getting over it. I'm going to fix it. But first I have to identify it, understand it, and then develop a solution, a plan to get over it. So in this case, I'll try to just pull up the recording. That'd be the easiest way to explain it. This is the 25th. So obviously I'm in short, right? And I'm annotating. These are levels from the daily time frame. If I go to, let's see if there's a point in time where I'm on the daily. Maybe I can just show you guys real quick from the chart that we have right here. Okay. So where I'm getting out is, number one, this discount wick, right? I thought it reached down into, this is Thursday, correct? This is Thursday. Am I tripping or is it different? Hold on. Let's go to Chrome, let's go to Top Step, and let's just do it here. Okay. There we go. I don't know why it's different on TradeZilla, but if we look at the Top Step daily chart, we can see that the market trades down into the upper quadrant of this discount wick, and that is basically in congruence with also the midpoint of this daily BISI, right? So that's where I'm going to be distributing my short positions at daily discount levels. So going back to the recording, you can see that's exactly what I do. Okay, initially I sell short 3 contracts. I don't know if I've locked anything in yet. I'm still short 1. Okay, so at this point in time, I've locked in one contract here, one contract here. And instead of just taking all 3 off there, what do? I'm trying to hold for the end of the day. And what happens? The remainder of the position comes back on me, stops me out for break even. Right, so you can hear I'm distributing my long at number 1, the midpoint of that daily gap, and then the upper quadrant of that daily wick that I just showed you. And then the remainder of the position comes back, stops me out for break even. So I was literally up $200 on that last contract and failed to execute because I'm trying to get the most that I possibly can from the market. Now, how did I just come to the market? Like, okay, I'm going to get in, get out at this level, at this one level that I know the market can confidently deliver and be done. That's it. Just take my piece of the pie and walk away. Then I walk away with an additional $200 from this trade. Instead, I give it all back. If we look at running P&L, see, I was up $673 at one point in this trade, but I walked away with how much? $423. So how do I literally give back over $200 in profit? It's this right here, trying to demand that the market give me exactly what I'm looking for, give me the full swing and going for the full swing. Just be content. Just take what the market gives you. So the real lesson from today was trusting my read on price, have confidence in what the market should deliver, and just aim for that. Get in, get out, just looking to take my piece of the pie, not the whole ass move, be conservative. I don't need to sell the high and get out the low. Demanding I perform this way is demanding perfection. Demanding perfection leads to frustration because of the outcomes like I had today. $200 left on the table, okay? There's Thursday for you, one more day, Friday, let's break it down. Now Friday, another day where I should have capitalized on a solid winning setup with a solid market approach. Exactly this happened. My plan is to wait for price to complete this market maker sell model, make a new low a day, and look for signs of price respecting the daily discount wick formed yesterday at the low a day around 10:30. If this does come at all, I know it's coming later in the session, and exactly this happened, okay? Read this again. Wait for price to complete the market maker sell model, new low a day, respect the daily discount wick at the low a day around 10:30. If we pull up a 50-minute, we completed the market maker sell model, we made a new low a day, reacted off the daily discount wick at 10:30. Why am I not able to capitalize? Why am I not walking away from this session green on the day? First, It's going to be my relationship with the risk that I have and how that's kind of hijacking my process right now. So in the first trade, right, this should not even be a loss. This should not even have to be a trade. And this was a complete accident because of the second trade that I put on. Now, if I pull up the recording, the easiest way to break things down for you guys, I'm in long as soon as we see this inversion fair value gap, right? Strong displacement closes over that gap. I'm taking it long. And I get a pretty good fill, right? But I know where my risk should be on this trade. And initially, I have it at the right point. Perfect. Initially, I frame it perfectly. So first, I'm looking like, okay, look at this small little gap, right? We have this small little inefficiency here. So it could reach down into that. So my stop has to go below that. If I leave my stop here, the trade plays out and I never get stopped out. Sure, it comes back to my entry point before it delivers what I'm looking for, but I never get stopped out at all. So there's no drawdown in the first place if I frame my stop here. The only issue is I'm risking $200 on this trade, which is basically the amount of one winning trade that I've had recently because I have not been able to capitalize on my winning trades at all. $200 amounts to a winning trade that I'm not able to capitalize on at all. Now, if I am able to capitalize on my win, it's probably more like $400 to $500 at this point. But $211 is literally twice what I'm used to risking. So I see that and I'm like, oh shit. Because I mean, look how scary this is, right? The market has gone down. We have 2 up candles and now I'm buying it there. I'm putting my trust in the reaction off of the daily discount wick here. I'm trusting that and I'm buying the market. Now at this point in time, look at the left edge of the chart. It looks pretty scary, right? So I'm thinking, okay, I have to try this because it is my model and it's there. I have to do it. I have to attempt it. Then I realize how much I would be risking on the trade, $200. I'm like, fuck. It scares me. Straight up. I'll be honest. It scared me. And I thought if I lose on this trade, I'm gonna get into some serious drawdown. Gave back everything that I've made this week. I'm no longer gonna end the week out in profit. I'm thinking of all these things, all these negative outcomes, and it fucking scares me. So what do? I adjust my stop loss to a point where I'm more comfortable tolerating that risk amount instead of a point where it makes sense that if the market reaches this level, then this trade idea is completely invalidated and I am wrong. And that is the mistake that I've been making recently, framing stop losses at points in the market where I'm comfortable with that risk instead of points at where this is where the trade is invalidated. And this is the reason for this loss. So know how the market literally stops me out, I think, by a couple of ticks. So I got stopped out at 24,539.75. And if we look at the lowest point that the market went to there, it was 24,539.00. That is the lowest point that the market went to. And I got stopped out at 24,539.75. So I got stopped out by 3/4, less than a point. The market stopped me out. This is happening because I'm framing my stop loss at points where I'm comfortable with that risk amount instead of this is where the trade is invalidated. That's another issue. So essentially, by trying to create the least amount of risk possible, I'm doing more damage to myself because it's leading to premature stop outs, which is what I see right here. Keeping risk as minimal as possible, risk intolerant or scared. Ironically, by scrimping and saving as much as I possibly can in terms of risk, it's led to more damage done. It's clear to me that the way I've been backtesting and just using a 16-point stop loss has conditioned me to not even know where to frame risk. Where I frame my stop is never off of, it should not breach this PD array if I'm right. Instead, it's, I don't want to lose as much, so I'll put it here. Yeah, that's good. This is leading to premature stop outs, resulting in a second trade that doesn't even exist had I framed my stop properly in trade one. And it's the same issue with Tuesday. Tuesday should have only been one trade, but if we look at the executions again, you can see that I literally barely got nicked out before the market started to turn in my favor. Now, I was incorrect about the direction of this day, right? But still, this should only be one trade because I take a long here, I barely get stopped out here, and because I barely get stopped out here, then the market begins to move in my favor. Now I'm thinking, okay, now it's playing out, and then I take another trade, stop loss below this low, and then I get stopped out again. So this should just be one trade. The second trade doesn't exist if I properly frame my stop loss at the swing low. But instead, I'm putting it at a point where, okay, I'm comfortable with this risk amount. And I'm only saving like a point. So what the fuck? All right. So that's a thorough breakdown of this week. Not really thorough, pretty brief and concise. I like to get into the nitty gritty, all the details, and tell you guys exactly what's going on. I mean, I'm just being real out here. I'm being honest. I'm being transparent. I'm showing you guys exactly what it takes to rise to the fucking top, to make this work, to trade for a living. Okay, this is the process that I do day in, day out, week in, week out, month in, month out, year in, year out. And this shit never stops. This shit never stops. All right. But all in all, what are actionable steps that I can take to get better and fix the problems that I have? Build a trade management model. So aside from the negatives, aside from everything that I just did wrong, this is the positives. This is how I grew this week. And I grew a lot this week. I'm telling you guys, I'm growing so fast at such an exponential rate. And a lot of that has to do with my environment right now. I'm house sitting, so I'm completely isolated. It's literally just me and the dogs and the cats and work. That's it. At home, my typical environment, there's shit food around, which I don't touch at all. I don't eat shit. It's gotten to the point where I can see like a fucking burger or a cake or a donut, whatever, and I don't feel any sort of temptation at all to want to eat that shit. But it's still there. It's still in the environment, right? The TV's always on. There's always some bullshit on the news or some sports, football, whatever distraction it is. I got a little puppy dog, and he's high energy and always demands attention. But here it's nothing. It's just me and work, and I've been able to grow so much in not even 2 weeks. But like I said earlier, the work works, guys. The work works. You gotta put in the fucking work. You gotta put in the fucking work. Aside from that, a black and white market approach, being very blunt, black and white about this is what I'm looking for and why, immediately showed results on Thursday and Friday. Implementation of the daily chart, actually applying the concepts that I traded to the daily chart and carrying it down to the lower time frame to drive the trade ideas that I'm formulating. It's been a game changer. And a lot of growth in my ability to handle loss. If you watched my video from yesterday, you know that I have realized I have conscious ability to control the losses that I experience, right? You have a conscious ability to control your perception of the losses that you experience. Meaning you can make that loss as painful as you want. Maybe you don't want it to be painful, but you're allowing it to be painful because you're not aware of how you're handling that loss. And because of that, you're allowing yourself to get down. You're digging yourself in a hole mentally, and you're doing nothing but weighing yourself down. You are attaching a fucking shackle with a 100-pound ball to your ankle because you're allowing yourself to handle your losses this way. Now, once you bring awareness to why am I handling my losses today? Why am I letting this outcome bother me so much? Why does this have so much weight about it? It's one trade and an eval. It's one small loss. And I know that if I come to the market the following day and repeat that same exact process and do the same exact things that I've built over the course of months, weeks, years of backtesting and accumulating market experience, I'm going to get a different outcome. This is just 1 point in the data set. One red trade means nothing. It means fucking nothing. Come to the market, do the same thing, and get the exact opposite outcome. That's how it works. That's how trading works. So I've had a lot of growth in handling my losses. Aside from that, that's about it for this one. Let me leave you guys with the biggest takeaway from this week. Just get your piece of the pie. That's the biggest lesson I learned this week. Just get your piece of the damn pie. Stop demanding perfection. Perfection leads to frustration. Frustration leads to undesirable outcomes that you don't want at all. Get in, take your piece of the pie, get out. Aim for the level that you're confident in. Just do that, get out at that, and be done. We're not trying to be perfect. We're trying to be profitable. And that is the issue that I'm facing with. So that being said, now that is it for this video. And if you want me to make any kind of content tomorrow, Sunday, that you're interested in hearing, let me know in the comments. And I'll take your feedback seriously. So appreciate you watching the end. Until next time, good luck and good trade.